Hello guys, welcome back to another Lumby training video. In this one we're going to be doing some in-depth stock analysis on PHUN, which is today's leading gap at around 470%, and its warrant is at 1,142% on the day. So a lot of people are probably wondering where this is going to be going, so we'll do our best to try and provide some analysis on this. So first we're going to use a 1 minute chart so we can see the intraday gaps. Usually we don't look for this, but on a stock that's gapped this much and then it's pulled back in the day, we can use intraday gaps tomorrow as targets and or where selling pressure may come in. So for example, 832, this is where we had a gap, and so most likely we could see it come into this level and either get end for the day, get some selling pressure, or at least just struggle at this level. So 1830 will be kind of a key level. Then the only other one we would have had was 738, but like mostly all gaps, they tend to get filled, and that's exactly what happened here before continuing up. So that's really the main gap we will be focusing on in an intraday level. And then if we go over to a yearly chart, we have our gap on where it gapped from yesterday, so around 158. We don't expect to see it to come to this target anytime soon, just for the reason being, yes, usually these gaps will come back to their original level, but when they gap this sharply, it usually takes months to come back to that kind of level. So it's not something we will be looking at or shorting until that level, because we would just take on a lot of risk to be able to do that. So now, what are the kind of key levels we're looking at? And the one thing I do want to say is that it's closed above the fourth deviation, as you can see on both the daily and the 4 hour. What this tells us is that it's trading at extremes. And when something's trading at extremes like that, and I mean you don't even need to have deviations for this, if you see a stock up 400% or 500%, you know it's trading at an extreme, and it's always a risky one to short. Yes, it will most likely come down, but it's more of a matter of when. You don't want to be trying to time this because it could quite easily do another 100-200% tomorrow. So that's why we never tend to short these, and if we are looking to trade them, we instead try to trade the bounces intraday when they come into key support levels. And where are these key support levels that we'd be looking at? Kind of 359, 292, 225, go on to the first deviations as well, I mean onto the one day. And these are the key levels that we will be looking at. So 404, 359, 337, 292, 271, 225, 203, and 158. The 158 is the gap fill and also the first deviation on the 4 hour. But yes, we do expect it to kind of come in within the deviations, but with deviations is they do change on a daily basis. Not extremely massive moves, but they do move. So that's personally what I see kind of happening over the next few days, is I kind of see it hovering between probably $3 and kind of its high, so what is that, $24, and it will give the deviation some time to expand up a bit, and then when our price targets up a bit, then I see it pulling back, because I don't see it coming back to 158, at least in the near term. So I instead expect it to give a few days at this kind of price level or a bit higher, allow the deviations to expand a bit, and then it will pull back when the deviations are expanded. So right now though, these are our key levels. I mean, there's not really much to it. Is at these levels you can expect small bounces or even reversals. So in each of these levels we would expect to get at least a small bounce play. I mean, you could probably look for a few percentage points when it comes into these levels, and occasionally it could be that, for example, if it pulls back, it could pull back, for example, to the third deviation before continuing higher. That's also a pattern you see quite a lot, especially using deviations, and it's usually the third deviation instead of the fourth. So this green one here, so the 337 level and the 292 level, it wouldn't be surprising for PHUN to kind of come back to this level, hit that deviation, and then continue and maybe to a even higher high. So that's the kind of overall analysis on PHUN. We are going to do one on Beyond Meat after this, so definitely check that out if you want to see that, because it is down nearly 12% on the day. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.